Hey traders, what's up? Richard K from Price Action Income. Just wanted to shoot a quick video for this week's market recap. Been looking at a few markets, recap some of the ones I've done last week, and then also want to be showing you some other interesting markets that I found are at very interesting, how can I say, market geometry levels. You either have to watch out if you still are holding positions and might be, as I might be expecting some corrections to appear pretty soon. From last week's video, we did have a look at the ES. This is on a weekly chart. You might remember that I've drawn this pitchfork. I'm still considering this run from this 2009 low as obviously the next bullish phase. Very interesting, doubling up this pitchfork because price left the boundaries of this upper red warning line and doubling up to the upside. And we've recently touched another market geometry line again. We've had a minor correction down to the downside, which is what I expected, and it'll be pretty interesting to see what happens. Obviously, market's recovered now and moving high again when it pips this high, or if it does pip this high. In any case, I do at some stage soon expect a correction lower. Now, previously, I might have shown you what I would believe was the Elliott wave count. It was something like a 1, 2, possibly a 3, a 4th, and a 5th wave going higher here for this bullish phase over here. But whatever the case might be, just be careful. I do think we are due. Let me just get my drawing tool out for a corrective move to the downside. It could actually last until, I don't know, about last quarter of this year. Whether that happens or not, we'll have to see. This could very well be the first phase of this last blow off top that I've explained or shown previously. I still am bullish this market, just being very cautious that I do expect a deeper correction. I will have to see if that happens. Obviously, you need a strategy to capture these sort of moves. But if you're trading futures or SPY or whatever, tracking the ES, you can obviously trade to the short side as well. This will be a market that I'll continuously update during my next videos. But just, yeah, at a very interesting level, it did hit this upper red warning line. Obviously, this is now just range to the upside because it doubled up this one from the bottom. But we are at a very important area. I do believe that price will very likely test these highs. It'd be interesting to see if it actually busts the highs and then immediately reverse lower. And that could then be the first signal that we'll expect a deeper correction to the downside. How deep that might be, no one can really tell. We might go into a triangle. It's too early to say that for sure. But that's why we continuously watch price action and then see if we can identify the pattern or corrective pattern we might be dealing with. I do think first wave up in this phase, probably a deeper second wave correction followed by another move to the upside. But it's definitely time for this market, in my opinion, to reset a little bit and to have a deeper correction. Then we also have the dollar index, and I've shown you this last time as well. I was expecting price to correct higher, which it has been doing. It's actually made a nice strong move to the upside last week. Quite possibly still going higher. Let me just get rid of that so you can see properly what's going on. My long-term expectation is that this is still some sort of a correction with more downside to follow and then a much more larger move to the upside. I'm still seeing this as a mirror movement, i.e. the same sort of range, perhaps an A, B, C, or who knows, might be a more complex correction in the long term. But either way, we're not trying to forecast the dollar index as to if it would go to new highs. This is pretty massive move to the upside if it does. But in either case, I think we can have a substantial move to the upside once price actually moves lower again. And maybe within the May, sort of April, June period, reach this low where I'll be looking for longs. Interesting. You guys know that I use pitchforks to track corrections, and quite often just going to my go-to setting, using a standard pitchfork. Price has not reached the top there yet. If we go to a shift pitchfork, then price is already busted through there, but they all line up sort of around about, depending on which one you use, around about up here between the 92.56 and maybe even high if it wants to test this longer term upper 50% dashed median line. I quite favor using in this circumstance the original pitchfork. It's been containing price pretty well, so we could still be gravitating a little bit higher, but like I mentioned before, I'm not terribly bullish on this, although price has been moving high on the dollar index. And then obviously it'll be important to see what your other currency pairs that make up the basket of the dollar index, like the Euro, US dollar, Japanese yen, pound, US dollar, and all those guys are doing. And if you've been following them, you'll probably see that they've mostly been weakening versus the dollar. So this is because of the strength. In my case, it's a correction that we're seeing. And then another move lower. And by this time, most people probably think the dollar is dead. And yeah, throw in the towel. And this is quite often how markets work. This would be, in my opinion, a very strong support area. We'll have to fine tune this if and when price actually moves lower down towards this sort of zone, and then we can fine tune it with my members and see if we can take some sort of a conservative after we have a reaction from these median lines. There's also confluence of multiple FIP retracement levels within the zone. And then also the timing that I'm seeing around the April-June period, depending on when price actually reaches there. And then see if we can get a reaction and see if we can get into after a higher high, some sort of a pullback, and get into a higher low and see if we can actually trade this to the upside using a swing trading technique that I teach. But yeah, I'll be very careful going still long here, although I do think we still have a bit more upside going there. Euro US dollar. I've been asked to have a look at this market. The recent highs here failed to break through the upper red warning line of this standard pitchfork that I drew. And this is the only pitchfork I could really fit with this bullish phase over here. And it's been doing a pretty good job. There was some resistance over there. Supported center median line, broke above it, sort of hovered there by the upper median line, then reached the upper red warning line, which is in extreme cases, when you have a strong moving market, quite often it will halt the market in its tracks, which is exactly what happened over here. Price then moved lower. I have a shift pitchfork there. Now exactly where, and this is again on the weekly time frame, a bit of a long range to look at, but in any case, always good perspective to have looking at a longer term time frame. We have this, what I might be an ABC, and this where the low median line of this corrective move on the shift pitchfork and your upper median line of this upward sloping one that defined a trend where they cross is where price actually has now found support. Quite often you'll find when you have two different angled or sloping median lines where they quite often cross is where you'll get quite strong support and probably a bounce. Now, depending on what the dollar index does, if it does move quite a bit higher, you'll probably see the Euro US dollar maybe hover around here a little bit, and who knows, we might even have a bit more of a complex correction going to the downside. But the Euro US dollar is something I'm not trading at the moment either. It has come down in a corrective move, but considering as what's happening in the dollar index, we might eventually still get some more upside on the Euro US dollar. Then I've had some guys or some people on YouTube ask me about Bitcoin. Bitcoin is not a market I quite often trade. I do hold some coins in the wallets that I bought from an exchange. This chart I've set to a monthly chart. And as you can obviously see, this has been one hell of a massive parabolic move. I mean, anything that goes up straight like this, and again, guys, from a monthly perspective, is, in my opinion, dangerous. But that being said, I think we are at levels where I think that Bitcoin will probably top out soon. Could be this week, next week, whoever knows. But the same sort of thing that I did with the ES here, where I doubled up my pitchforks, is what I've done on Bitcoin here. Now, Bitcoin, according to Bitstamp, I use this low over here. It's difficult to see. I'll have to zoom into that more if you are interested in having a look at that. Price then moved up. I thought it was the first phase, and then made a higher high and a higher low. And then when you double this up to the upside, you will find that price has reached recently this upper red warning line. I just want to move that out of the way a little bit. It then made a correction lower and then started moving up again. Now, when you're dealing with parabolic moves like this, which is obviously very difficult to perform market geometry on, especially when you want to use stuff like Fibonacci extensions, you can quite often, let me just delete this, look for the range prior to a breakout. And this would be the range to a high, and a high, 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 low, and then a breakout to the upside. And use, let me just see if I can get that right, go to that high over there. And rather than using this one like you would and project it from this low, we do what we projected from that higher. This is actually a Gann technique, and it works extremely well with markets that are in parabolic phases. In this case, obviously a bullish phase. And very interesting also is that it is kind of reaching double the range of this first range and then applied on the top here. This is a technique that's worked extremely well, especially in commodity markets, going historically back to stuff like wheat, soybeans, even crude oil. So if that's something that you're interested in seeing again, then please drop a comment in the comments section below this video, and I can also show you how this techniques work. It's different than Fibonacci extensions. It basically takes a range and then doubles it up. So you'll see that's 100% of this range, and that's 200% currently of this range, which lies about the 58,760 odd level. Who knows, price might even go to the 60,000 level. But if you look also from what I do time to time from an Elliott wave perspective, I see this as a first wave, a second wave, and that we're now busy with some sort of an incomplete third wave. Let me just make that a bit bigger for you guys. Let's use cycle. So I'm thinking this was our first wave to the upside. So I'm still extremely bullish, but I'm just worried that we might be actually completing. Just bear with me again. 1, 2, 3, 4, 5, and I have to change that to a minus cycle. Let's use intermediary. So I think this was the first wave. Obviously a second wave was a high low, and we're still busy with this third wave, massive third wave to the upside. But looking at where we are with market geometry, we're probably running into the third wave of this third impulsive wave, if that makes sense. And we might be getting a longer term correction to the downside, followed by another move to the upside. And by that time, we'll probably have to double up these pitchforks again if that does happen. But this is just a long-range forecast, in my opinion. I also spoke to a long-time trader that I know, that Ian, South Africa. He's very big into his Elliott wave analysis and also very accurate with that. And we tend to agree on what we're seeing here. So we're not done with going up yet, but just be careful at the levels that we are at the moment, that we could get a longer term fourth wave correction, followed by a fifth wave to complete this larger third wave to the upside. And then, guys, it will probably be quite a long and scary correction before we get another fifth wave. Let me just get rid of that drawing tool and then end with fifth wave tide. Forget about the time periods that I'm drawing here. I'm just kind of showing you the path that I'm expecting and at which sort of phase we are, I believe, within Bitcoin. So still, it could definitely go much higher. I'm just careful that when everyone's jumping in at these highs, just be careful. Obviously, this is not trading advice. We're all adults over here. So just take this with a pinch of salt. But if you do follow this type of analysis, just be careful. I do think we nearing a top of this third wave, of this impulsive wave, followed by correction. One wave move up to follow, complete this larger third wave, larger correction down again, and then a fifth wave to the upside. All right, guys, so that's it. Well, that's all I have for you today. Hopefully you enjoyed this video. If there's any other markets you want me to have a look at, then please drop a comment down below in the comment section below this video. And if you haven't done so before, please subscribe, hit the bell button so you're alerted when we post a new video. And I hope you're all staying safe out there, and I'll be back next week. Until next time, thanks for watching. Goodbye.